Welcome back. The drama at Gildan Activewear continues to play out. Most recently, Bloomberg News is reporting that a disagreement over strategy led to the dismissal of Gildan Activewear's former CEO, Glenn Chamandy. For more, we're joined by the reporter who has broken the most recent story, Matthew Dion. He joins us from Bloomberg's bureau in Montreal. Matthew, thanks a lot for joining us, and congratulations on some great reporting on this story. For investors, it's becoming increasingly difficult to evaluate the two sides in this battle. Let's sum it up for us.
Exactly. So it all started about a week ago exactly when the board, Gildan's board, sent a news release saying that Glenn Chamandy was out as CEO and being replaced by Vincent Terra, a former executive at Fruit of the Loom. And 2 hours later, Glenn Chamandy, who I should recall, took over his father's company in Montreal in the 1980s with his brother, and then brought it up to an 8.5 billion market cap just before all this happened. So he was ousted of the company. It was not clear why. 2 hours later, Glenn Chamandy sent a statement saying that he was fired without cause, quote unquote. And then later on during the week, the stock tumbled on the first day on Monday by more than 10%, and later on in the week, some top shareholders, including the largest one, sent some letters to the board that were made public asking for Glenn Chamandy to be reinstated as CEO. So that was that, and Sunday we got an interview with one of the director on the board of Gildan, Luc Jobin, a former CEO of CN Railway, and he said, back in October, we reviewed our long-term strategic plan. We were confronted with an inorganic strategy which the CEO brought forward and entailed multi-billion-dollar acquisitions outside of Gildan's core of manufacturing. These acquisitions would have been dilutive to shareholders and increased Gildan's debt by a lot, according to Luc Jobin. He said that the board has been struggling with an entrenched CEO lately. Chamandy pretty much gave the board an ultimatum saying that you have to move along with the M&A strategy and you have to keep going with the succession plan, looking for an internal candidate. But clearly here, the internal candidates did not meet the bar to be the next CEO of the firm, so the board decided to look elsewhere outside of the company, and they found Vincent Terra. And that's what happened here. It's not clear what's going to be the reaction from top shareholders in the next few hours.
So your story was on Luc Jobin, a director of Gildan, asserting that Chamandy wanted to take the company on a acquisition strategy that the board found inappropriate. Chamandy has responded quite recently, this morning. What has he said?
Well, all those comments from Luc Jobin were pretty surprising because we did an interview with Glenn Chamandy Friday, and we did ask him, was there something else besides the succession plan? Was there something related to the M&A strategy, for example? And he said, no, the only issue here was the succession plan, for which I was completely excluded. So this morning he sent a statement saying that that there was no ultimatum, and this is a sideshow to distract from the reaction the shareholders have had with respect to the board's handling of succession planning, in which I was not involved, he repeated. I did not and could not orchestrate or control the events. The board conducted the process. So, two versions here. We did ask this morning to the top shareholders that got out last week if they're still holding their positions, because Luc Jobin told us that these shareholders did not know anything about the M&A stuff that Glenn Chamandy wanted to bring forward. So that may change their mind on what happened here if they really want Chamandy to be reinstated as the CEO of the company. There's one large shareholder, the second largest shareholder, Coliseum Capital Management, who's on board with the board of directors that supports the board. They're willing to buy more shares now, and they even have the managing partner that was appointed as director on the board.
It's a dizzying turn of events for investors who own the stock or are considering buying the stock. How would you characterize the market's reaction?
Yeah, well, the stock tumbled Monday on the first day of the announcement. It was up and down over the past week, up 4% after Jaredowski Fraser, the largest shareholder, said that they wanted Glenn Chamandy to be reinstated. Now this morning, shares are down 1.30% right now at $45.55. So for now we're not back to the levels we were seeing before Chamandy was fired.
Matthew, thanks a great deal. That's Matthew Dion. He's with Bloomberg in Montreal and broke the story early today.
So let's bring in Jack Ablin, Chief Investment Officer and founding partner at Crescent Capital. Jack, thanks so much for joining us today.
Thank you, Jacqueline.
So when you're thinking about expectations for interest rate cuts, we're talking about it quite a bit in this country today because of the latest inflation data, but it has been the talk of the town in the U.S. as well over the past week after the Fed's latest decision, but also the commentary from Chair Jerome Powell. What are your thoughts around the messaging that we've been hearing from Powell and Fed speakers since then when it comes to the possibility of interest rate cuts next year?
Well, I will say I was surprised as anybody when I heard Powell intimate rate cuts. I fully expected him to look out into the Fed funds futures market and say, wait a minute, we can't have a March cut. That's too aggressive. And here it was. Not only did he not say that, but like I said, he talked about cuts. Of course, then we had other Fed governors, Williams and others, come out and try to walk that back. But investors don't want to hear it. They want to hear the good news. They want to hear Fed cuts. They want to hear, slowing growth, slowing inflation, and that's what we've gotten.
So what are you wrapping your head around in terms of, timing or the number of cuts for the next year and then the sort of implications of that?
Sure. So our base case outlook for next year is a slowing growth, slowing inflation, and we do think that the inflation rate gets to around 2.3 to 2.4 during the course of next year. So if the Fed cuts even 4 times, they're still going to be aggressively tightening because generally we view neutral as the overnight rate equal to the inflation rate, not higher than the inflation rate.
So from an investment perspective, what would you be thinking about in particular in that sort of scenario next year?
Sure. So in that kind of environment, I would say that the market's going to broaden. We also think with the yield curve, perhaps the shorter term rates coming down substantially more than the intermediate or longer term rates. That's a good environment for the financial sector, banks in particular. We think it'll be a favorable market for bonds. Equities overall, we think can be high single digits. It depends. Small caps, for example, could go low double digits. And really the only area of the market we think will likely trail is going to be anything commodity related. In a slowing
weakness on the commodity side of things. There. Jack, sorry, we just lost your audio for a quick second there, but I think you're back. So maybe I'll just ask you about the possibility of a hard landing. You have that as one of your scenarios, but a less likely one.
Right. So we put a 60% chance of slowing growth, slowing inflation, a 30% chance of a hard landing, that things come down a little too quickly or the Fed doesn't ease quickly enough to stay neutral, and we end up in recession. In that environment, of course, bonds do well, stocks mixed, higher quality does better than lower quality, and commodities not so well.
We're just taking a look at some of the results from FedEx crossing the wire here. I said we were going to be watching out for the results for the latest quarter from FedEx. I'll just want to bring those to our viewers now for a quick sec here. FedEx in the second quarter reporting revenue that was a touch higher than expectations, $22.2 billion. The estimate, or sorry, a touch lower than expectations. The expectation was 22.4, came in at 22.2, so a hair below there. In terms of adjusted operating income, that was also a touch below, 1.42 billion instead of 1.49. It still sees adjusted earnings per share in a range of 17 to 18.50. The estimate was 18.22. It'll be interesting to see what sort of reaction we might be getting on markets in after hours trading to these results. results. But when you're thinking more big picture about FedEx, we know that it was doing some cost cutting. We know that it was in an environment where there was the threat of a strike at UPS, and it might have benefited from that in terms of volume at FedEx during the year. So, different factors to consider in this sort of a space. How do you see, a company like FedEx performing in the year ahead?
Yeah, so for us, it's a great indicator. It's a great bellwether of retail, but also industrial volumes. We were a little concerned when UPS came out and warned about their forecast. So to have FedEx come in even just slightly below expectations is still a decent sign. So in an environment next year, our base case, we do expect slowing retail activity. We don't expect as many packages flowing through our system. And in fact, one of the things we're concerned about is in the emerging world are those export countries. We would prefer to own countries that can rely on domestic demand, like India, for example, versus perhaps China that relies on exports.
Okay, Jack, great to get your thoughts today on the broader market as well as FedEx. Really appreciate it. That was Jack Ablin, Chief Investment Officer and founding partner at Crescent Capital.
Well, gold has been finding its groove as we head into the end of the year. Since early October, the price of bullion has advanced close to 10%. It's outperforming the TSX in that time frame, with a weakening U.S. dollar helping to bring in buyers. The growing expectation that interest rates have peaked is part of that story. At the same time, we are still hearing about inflation challenges remaining, possibly over the long term. Even Costco shoppers making headlines. They seem to be seeking out an inflation hedge. The company recently said it sold more than $100 million worth of gold bars in its latest quarter. We had a conversation at the start of the year with the mining legend and Franco-Nevada Chairman Emeritus Pier Lantz, who was bullish on gold at the time. He joins us now with his outlook for the year ahead and more. Good to see you.
Good to see you. Thank you for having me.
Ever do any gold bar buying at Costco?
No, I have not. I find that absolutely hilarious, but 100 million talks a lot loud, okay? What's interesting is that those gold bars are actually from South Africa.
There you go.
I would have thought they would have used like U.S., produced gold.
Yeah.
But no.
I'll have to ask the Costco executives about the strategy on the gold bars, but there are a couple of dynamics at play. I mentioned that you were fairly upbeat coming into the year on the outlook for gold. Is the conversation in the market surrounding gold right now, would you say it sort of mirrors what we were talking about maybe at the start of the year as well?
The conversation in the market is, if you talk to portfolio managers, they're making so much money with all the high tech and all the bonds have done quite well in the last little while, that they're not still focused on gold whatsoever. But for me, when I look at it, I believe that the U.S. dollar has peaked. And gold is the anti-U.S. dollar. So that is one of the reasons why I'm so bullish on gold for 2024.
And so the dynamics there, I mentioned that you've got interest rates or a belief in the market that interest rates have peaked. And that works. That's one of the factors working against the U.S. dollar and maybe benefiting gold. But we've also talked in the past about how there are still some longer-term inflationary concerns. Can you explain to our audience why that dynamic could be good for gold at the same time that we're talking about interest rates coming down because the short-term inflation trend has been encouraging? How does that work?
Well, it's a parallel would be the stagflation of the 1970s when we had like very high inflation as well and no growth, okay? I think that what we're going to see in 24 is some growth, but it's not going to be in the 3-4% like we've seen over the past 2 years. And inflation is going to be really sticky, like around the 3% level. It's going to be higher than what they hope for. It's not going to be 7, 8, 10% though.
But your bullish thesis on gold is not based on inflation going away. It's based on the fact that there's only so far interest rates can climb if there's an uncertainty for the economy, and that keeps some of that sticky inflation around, and that possibly benefits gold over the long term?
It's all about the US dollar. John, I mean, think of gold as the anti-US dollar. And I look at 24, the US government is going to have a $2 trillion deficit. Interest rates are going to come down because it's a presidential election year. Okay, and what does the Fed do in an election year? They like to make it easy for the incumbent to win the election. Okay, so interest rates are going to come down, but it's not going to happen in Europe. I think the euro is going to be, going up vis-a-vis the US dollar. All of the other currencies will, and gold will be going up.
What's interesting is there's been a big appetite growing for Bitcoin. Everybody's talking about, ETFs in that market. A couple of years ago, there was this huge appetite for crypto. Some people started talking about that as sucking away some of the attention from the gold market. Based on what you're talking about, who knows? Maybe people will have interest in both gold and crypto. But does cryptocurrency momentum steal from the gold story that you're outlining here?
When you look at central banks, what are they buying? Are they buying crypto or are they buying gold? Last year they bought 1,200 tons of gold, okay? And why they're buying gold? Because they're diversifying out of the US dollars. They say, we don't really trust the dollars, we don't trust America to let us exchange our money when we need it in the times of need, and they're buying gold. And I think that when the US finally puts regulations around the crypto market will be very small compared to the gold market.
Now, when we spoke at the beginning of 2023, you also highlighted gold stocks as one of the ways investors can, have a foot in the game. You mentioned technology stocks having a big year, but there are a lot of gold stocks that actually had a very strong 2023 as well.
Not really, John. No, the gold stocks are still trading as if gold was $1,500 and not $2,000+ an ounce. So they're trading at 50% of their real value. So I look at 2024 as a catch-up year for like the vast majority of gold stocks. I think they're going to outperform any other equities in the market.
What do those companies have to do outside of just, if the price of gold continues to rally, maybe they benefit? Because we always have this conversation in the energy market about how there's value in energy stocks and that the companies in that industry have to keep finding ways to appease investors, shareholder-friendly stuff, that kind of stuff. If you had to sort of pick a theme to be watching for the gold companies themselves, between doing things that are shareholder-friendly or deal activity, I mean, what are the things you're going to be watching for in 2024?
I think there's going to be a lot more deal activities. We've seen already in 23 some like really big deal, like the Newmont merger.
Yep.
So I think that in 24, this is going to probably accelerate because it's cheaper right now to buy the ounces on Bay Street than it is to explore for them.
Now, beyond gold, obviously you're watching the story of copper very closely as well. Everybody is, the long-term story around copper. Last time you were on as well, we were talking about the future of Teck Resources. And I do want to get your outlook for what happens with copper, let's say, in 2024.
I'm very bullish on both copper and gold for 2024. I think that with the closure of Cerro Cobre Panama in Panama, which is a real tragedy, the copper market is going to be very tight. In fact, it'll be in a deficit for 24, which will support prices well above $4 a pound, in my view. With any kind of activity, it'll be over $4.50.
The CEO of First Quantum was on Bloomberg television today, and obviously it's been such an uncertain time, so much moving so quickly tied to their operations there. What happens with First Quantum? I mean, how do you deal with a situation like that?
You have to deal at the political level. And right now there's a huge vacuum in Panama at the political level. There's an election coming up in 4 months, and sort of like the current president is lame duck. And so is the legislature. So nothing's going to happen for 4 months.
But in the same way that we're covering these Red Sea attacks and people wonder what that means in terms of oil supply, what's happened with First Quantum in Panama impacts the copper supply story heading into next year.
Huge amount. Yeah. Huge amount. I mean, Cobre Panama is the 5th largest copper mine in the world. So imagine you shut that down. Like, you lay off 40,000 people. Like, this is the number of people that are unemployed because of that. And so it has a tremendous impact.
Pierre, it's good to see you. Let us know if you get more information from the Costco executives on their gold bar buying strategy. Nice to see you. Appreciate it.
Always a pleasure. Thank you.
Pierre Lantz is Chairman Emeritus at Franco-Nevada.
Welcome back. Endeavour Silver is a Vancouver-based silver mining company focused on the growth of its operations in Mexico. According to TD, its 2 mines in the country produced an estimated 5.7 million ounces of silver this year. It's also a company that has struggled in the past 2 years. Its share price has sunk, and it's very recently been taken off the S&P TSX Composite Index. But Endeavour's fortunes could be about to change, with the company's Terronera mine set to come online at the end of 2024. For more, we're joined by Dan Dixon. He's CEO of Endeavour Silver. So first question, what is the current status of this Terronera mine?
Yeah, no, I appreciate first off having me on. And yeah, you're right. It's been a kind of a tough 2 years from a share price standpoint, but it's an important inflection point for us as a company. And our Terronera project, we announced that we were going into construction at the beginning of this year, April of 2023. And right now we're about 45% complete. We think we're still on time, relatively on budget for expectations that mine's going to get commissioned in Q4 of 2024, then ultimately significantly change kind of the fortunes of Endeavour Silver and the fact that it provides significant free cash flow and takes us from 6 million ounces of silver production to another 7 to ultimately 12 million ounces of silver plus gold.
Are there any challenges you're facing right now at the mine?
We're facing always challenges. It's the way the mining industry works. At our current operations at Guanaceví and Bolañitos, we've had higher costs over this year, and that's not precluded just to us. It's kind of something that we've seen across the industry. We got to continue to work to try to make sure that we combat the inflation that we're seeing effectively in steel prices and reagents, and see some productivity gains for hopefully in 2024. And at our construction project, Terronera, I mean, there's always challenges. That's why we get paid to manage this. But ultimately, I think it's going extremely well. And it's never going to be linear. There's going to be ups and downs. But in general, it's been a very positive experience at Terronera thus far.
You know, one of the questions I guess many would have is, how is Endeavour balancing its capital needs for ongoing projects with shareholder value, just given the 70% dip in share price since May of 2021?
Yeah, it's a difficult balancing act when it comes to how we allocate our capital and how we raise that. We have secured $120 million of debt financing through reputable banks that work in the mining space to ultimately build out Terronera. Terronera itself is a $230 million build. So it's just over 50% of the capital is coming through debt, which is SOFR plus 3.75%. So it's very good terms for us. Ultimately, we always look at that and we try to maximize value for our shareholders.
You know, I did mention off the top that Endeavour Silver was recently deleted off the TSX. Does that sting? And when do you think you'll be able to get back on it?
Yeah, I mean, there's a 1 year kind of cooling off period before we can go back in. Of course, it stings. We like to know that our market cap is sitting above $450 million, and our liquidities remain very strong. So it's come down to a market cap standpoint. And sometimes it's out of our control, and ultimately the margin squeeze that we've seen across our industries impacted our share price. Silver prices are sitting at $24 right now. Gold's touched off. It's 2040 right now, $2,040, and ultimately those are good prices. But what we've seen across our industry is ultimately shrinking in margins because of the cost increases, and that's no different to us, and that got reflected in our share price. If we can execute on Terronera, we'll get back into the TSX Composite, and it just takes some time.
Fair enough. Do you think your company might become an acquisition target if the share price doesn't improve as that Terronera project moves closer towards production?
Yeah, I mean, at the end of the day, we always think we're an acquisition target. We have Terronera is going to be one of the best assets in the silver space, and ultimately, it's our job to manage that. And if our share price stays where it is, I can expect a lot of people want to own it. But ultimately, our expectations, if we can execute on Terronera, that will get reflected in our share price, and it'll take care of itself. We have another project coming in behind Terronera called Pitarrilla, which is also going to be a Class A project in the silver space. And so we want to be here, and we want to continue to grow Endeavour Silver Corp and be around for the next 15, 20 years.
And would you at some point be also looking to evaluate potential M&A opportunities yourself?
Of course. I mean, you've touched on where our share price is, so it makes it a little bit difficult for us right now, but we're always looking for assets going to improve and add value to our shareholders. There's always something else there on the market. We have a corp development team that looks at those projects and try to find a fit that works for Endeavour and ultimately what makes us a bigger, better company and ultimately better value for our shareholders over time. So we look at everything that we can.
And always a nice time of year to have to go down to Mexico to check on your projects. That, of course, is Dan Dickson, CEO of Endeavour Silver. Thanks so much for joining us.
There's that music again. It's the end of the year. Plenty of Canadians are looking to analyse and adjust their budgets as we head into 2024. And of course, there's questions. What will the impact of inflation be on holiday shopping? How can I make meaningful changes to my budget? Joining us now to help address those questions and more, Patty Lovett-Reid, our beloved former colleague, chief financial commentator at Home Equity Bank. It's great to see you.
You know what? It is absolutely delightful to be back here. And I'm thinking to myself, the holidays, people have probably done what they're already going to do.
Not all of us. Some of us are going shopping today.
Oh my goodness.
Go on, sorry.
Okay, but the point is, you know what? New Year's resolutions, again, just don't seem to work. People will make them, but I would say about 80% fail within the first month of the new year. And so what I'm thinking, given the fact that the economic landscape is questionable, inflation is still high. Rates, whether or not the Bank of Canada Governor Tiff Macklem has to move another 25 basis points, maybe it'll be data dependent. He's already telegraphed that, and he's telegraphed that the first 6 months of the year are not going to be great for a lot of households. So I'm sort of thinking, okay, how do we get through this? And I think it comes down to, Andy, a money mindset. How do you change that I am going to spend, I am going to forget about budgets? How do you actually say, I'm going to change the trajectory this year? And I think you do it. If you want to lose 10 pounds, not that you need to lose 10 pounds, but if you did, how do you do it? 1 pound at a time. So how do you change your money mindset? One decision at a time. And so that may mean that you're going to make some tough decisions. You're going to change some of that mindless spending. And you're going to get very focused on what matters to you. I have read so many reports. Everybody says, I want to get out of debt this year. And then, you're into it. And the first time you're going to order something from whatever, Uber Eats, whatever it is, you throw that caution to the wind and say, I'm going to do it. Small changes have a big impact on your financial life.
It's interesting you said mindless spending, because I engage in mindless eating. I'll be watching a show and I'll just be putting chocolate in my mouth without even noticing it.
Without even thinking about it.
Yeah.
And so it's about having this frugal mindset. I had a previous job many ago where I had an opportunity to sit down with people who had investable assets of over $25 million. So you don't have to have $1 million to have a millionaire mentality. Just because you can spend doesn't mean you should. These people will not be frivolous. They will not go into debt to consume. They will go into debt to invest in themselves, their business, maybe their portfolio. But let's not lose sight. The economy may be slowing down, but that doesn't mean that you can't make it, and I'm not coining this originally, the year of yes. Yes to new opportunities, challenges, experiences, because our economy needs those who can afford to spend to spend. All I'm saying is I think we're all having to be maybe a little responsible because there is that uncertainty.
And inflation, we got complacent, didn't we? Inflation was so low for years, and then over the past 2 years, it's really been painful.
It's been very painful for a lot of households. And, there are families that are having to make tough decisions. We're starting to see delinquencies on the increase, where payments for their mortgage are delinquent now 90 days or more. We're seeing the average non-mortgage debt continue to inch higher, around 21,000 and change, according to Equifax. So when you look at these numbers, people are saying, do I buy meat this week, or do I make a mortgage payment or a car payment? And so what I'm hoping households will do is change some of the behavior, small amounts, whether it's I'm not throwing out any groceries from the fridge this week. We are not going to order in this week. We are going to supercharge our budget, not just on accommodation and utilities and things that taxes that you know, but you're going to say, okay, those one-time events, birthdays, that holiday, this season, next year. So I encourage you, Andy, do you do a net worth statement?
I have done it. And, you know, it's good. It's a good reality check.
It is. It's a snapshot.
Yeah.
Jim and I, my husband, we've done it every year for 30 years. I can tell you not one of our financial plans has come to fruition because there are going to be speed bumps. There are going to be financial detours. There are going to be emergencies that come up that need money. But you can't take corrective action if you don't know the numbers.
Yeah.
You need razor-sharp precision.
Yeah, that which is measured improves.
Yes, So when it comes to goal setting this year, I don't know about you, but I'm a big goal setter, as you know. I like small goals that are stretchy, that are realistic, that I put a time horizon to, that I'm going to get excited about. If I tell you to save for retirement, or what if you lose your job, Andy? You're going to say, well, that doesn't excite me. I'm not going to save my money for that. But if you own it, it changes behavior.
Yeah. It's interesting. I mean, I'm trying to think small goals. I mean, it's easy to waste money on food, takeout or restaurant meals.
Yeah, and I know people will say, you know what, Patty, giving up that latte every day is not going to change my financial trajectory. Have you ever looked at it over a year?
Yeah, that's right. I mean, say it's $5 a day.
Yeah.
So that's $25 a week.
Keep going. Yeah.
So we're looking at more than 1,000 a year.
Yes, exactly. And maybe you redirect that. So when it comes to, you know, paying off that debt, you know, I've often said, pay the one that's costing you the most.
The old credit card.
That's right. But maybe for you, if you know your mindset, maybe you pay off the credit card that has the smallest balance because you go from 5 pieces of outstanding debt to 4 to 3 to 2. It's a power of momentum. And momentum is one of those things. I can't create an environment for you to be motivated to do things differently with your money. But you can do so by taking a few disciplines and watching the impact. And that is very motivational.
I mean, I know this is not an original theme, but do you think, and it's always easy to dictate what we think the schools should be doing, but do you think they should be trying harder to teach basic financial skills?
You know, I do think that they should. I also think parents, to the extent that they can help their children feel empowered, that, you know, social media, and I'm on social media, and I know people said, oh my goodness, you wore the same outfit twice. Yeah, I did.
Yeah, good
and
for
you know,
you.
here's a stat before we run out of time. I'm an ambassador for Canada Helps. And one of the things that stood out for me the most this last year in their survey, 17% of those they surveyed reached out to social services to get by. And 69% of the 17% did so for the first year. So back to your original point, people are struggling, and you think it's, you know, it's not our neighbor. Look at all they have in the driveway. You know, we've said it. You're trying to keep up with the Joneses, they're broke. And we're seeing it more and more now.
So Canada Helps, you donate to any charity in Canada.
86,000. 86,000 different charities they represent.
And the idea is to turn the page on poverty.
Yeah.
Okay. Patty,
nice.
It's great talking to you.
I am thrilled to be here. Thank you for having me.
We're delighted to have you back. Have a great holiday and a wonderful 2024.
Same to you, my friend.
Patty, love it. Read the one and only.